3 hits to the low, hit the high, back in the consolidation. Euro USD held a level during U.S. session, during London, it moved in the U.S. session. Same thing, right past the 4-hour. Consolidation on GBP CHF, and then they worked it into the stop hunt zone box and dropped. Spiked to the outside, ended the day in consolidation. It's kind of funny, man. All right, here's GJ. Same thing. Perfect W formation. This was on March 19th. That letter came out like the 18th, and this is the 18th going into the 19th. Anyway, some of you seen it, some of you didn't. It's not important, but the bottom line is, look, it goes on and on, man. It's actually hilarious. And then I received some of these emails. Steve, I finally doubled the demo using 2% risk. Respecting it like a live account, it has been tough, but now that I have done it, I feel I'm more confident in doing it with the live account. I am getting it. With the help of the DMR crew and you, thank you. Well, that was a beautiful letter. Thank you. Steve, thank you for your commitment to make everyone successful. This is way above and beyond any other trading school. I like to think that too. Since beginning of the year with Jim on board, the DMR, my trading has turned, and I've had 2 positive months in a row with consistency and feel I'm starting to turn the corner. I would say so, buddy. You are turning the corner. And this outside structure to the high was a perfect trade that a buddy of ours took, and he got stop hunt to stop hunt. He spiked out at the open for his plus 50. Nice trade there. So anyway, still think it's random. I know you don't. I know your guys are on my side. You wouldn't be here. But here's the point. Don't let the negativity of the naysayers get into your head. You guys have enough baggage and shit to overcome on your own. You don't need these other people telling you and putting ideas into your head. Because they don't see it doesn't mean you can't see it. And if you're struggling, we're going to change that. That's why I'm here. That's why I'm committed to you guys on Sundays. All right, that's enough of the mail. Let's get this shit behind us. I wanted to respond to that letter. It came out. I thought it was pretty shitty. They're former students of mine, by the way. Well, actually, they're still students of mine. They're welcome here anytime. But they put this letter out and pretty much made a dig on me, and I just wanted to throw it out there. All right, forum privacy. Listen, I'm letting out my videos, my recordings, and you know what happened last Sunday. By 11 o'clock, this recorded session was out there already. So I'm trying to protect everyone's personal data, my material, the class videos, and the boot camp segments. So for now, I need to leave it set to private mode. Some of you asked me why you can't PM people and go through the database and stuff. Just understand I need to leave it like this for a little while. We're working on things. I'm actually considering changing the whole forum over to another venue. I'll let you know. We're working on it. So all this bullshit can stop with the IP addresses and the lockdown, all the garbage. I'm tired of it. I know you are too. It's frustrating. It cracks me up when I can't even log in my own forum and I got to wait an hour for the thing to reset. Because I tried to log in on my iPhone or something, you know. I know it's frustrating for you guys, and I appreciate your patience. So I'm in the process right now of trying to find a more secure venue that will give us some of the freedoms back that we had in the beginning. Okay? So work with me on this. All right. I think that's it for housekeeping. All right. So went over mail, the giveaway, housekeeping. Okay. Market Maker Bootcamp today. R&D, we're going to look at some of the homework that was done. We'll talk about the weekly cycle some more. We're going to cover flashcards, and then I'm going to cover the trading zone. That's the schedule for the next few minutes or for the next hour and a half. We'll go from there. All right. Papers out, ready to go. Okay, what I want you to start to do is look at the weekly cycle on a 4-hour chart. Okay? Write this stuff down, and then I'll show you some examples. What I want you to do on the 4-hour chart is block the first 8 hours off. Mark the high of the first 8 hours and mark the low of the first 8 hours, 2 bars. This, in essence, is the accumulation phase of the week. It's like I told you last week, it's the Asian session of the week. And it's ironic that it starts at Asia. Why 2 bars? 2 bars represents the Asian session, 8 hours. The first 8 hours in the accumulation phase of the market forms the psychological support and psychological resistance level. Do you understand? There's a perceived support and a perceived resistance that accumulates in the first part of the week. The dealer has to exploit those levels in order to get people committed to the game, spend their money, the things that I've talked about before. What they will do is they will trade away from those, trigger the stops, the same things that happen intraday. You count the first 2 bars at the tracer. Okay? Let's look at it. Let me grab my pen. Okay, so in essence, here's the first 8 hours of the week, right? Okay, now, there happens to be a line here. Let's just draw the line like this, pretend. Here's what you got. Look. Accumulation phase, first 8 hours of the week. The dealer hits the stops on the psychological resistance level. He drags it away and breaks the psychological support. Okay, forms the midweek reversal and trades back into the range. After the false move week beginning, you trade away from the high, initial high of the week. Okay? You have your 1, 2, 3 pushes in here. The dealer ends back in consolidation. This is the week, right? This is an entire week. But this is the same exact behavior that I've illustrated for you intraday. Yes, Ben, it is this easy. It really is this easy. It's just you got to open your mind and try to see it. Look. Here it is again. First 8 hours are blocked. Psychological support, psychological resistance. Dealer spikes high, grabs the traders. He doesn't make 3 levels, but he makes a sloppy W, comes back late in the week and hits it again. This is like GBP this week, by the way. So if you took a trade here, you probably bagged. When he comes back to the level and doesn't take it, you got a trade right here. And in 4 hours, this one paid out huge. Goes into consolidation. Ends the week after he picks up the pendings from the previous level, right? It's all about perceived support and resistance. Most traders fall for these moves. I can't say this enough. Most traders fall for the garbage. So if you understand what they're doing and don't fall for it, identify the pattern on a larger time compression over the course of the week, and you could project where the dealer is going to go for the week. You understand? I know it's like, oh, Steve, it can't be that easy. It really is. It's simple. Okay? First 8 hours, perceived support and resistance. What does the dealer do? He railroad tracks past it, which 8-hour railroad tracks, right? False move week beginning. He rises up only 2 levels. He hits it, outside structure to the high. 1 push, 2 pushes, 3 pushes to the low. Dealer ends back in the range. Exactly in the same level he started, but not quite so high to let out the long holders. Okay, 4-hour chart, my friends. Pay attention, because guess what the homework's going to be? Okay, a choppy week. Not as clean, not as beautiful, but guess what? Psychological support and resistance. Accumulation phase of the market, first 8 hours. Dealer sets the level. The market maker spread is set for the week in the first session of the first part of the week. Remember? 8 hours. Do I have to do it for you? Accumulation. Market makers hit the high, hit the low, form the spread. They hit the stops. They rise. Most of the time, 3 levels, textbook. They pull back, end the day back in consolidation. Every one of you that's here saw me draw this for you in a sales presentation. Okay, so what I'm asking you to do is to understand this segment of the market intraday and apply it to a larger time compression, 1 hour or 4 hour. 4 hours is easier to see when you look at it like this. It's a different take on it. And understand that the pattern that Steve sold me on is the same exact thing that the dealer does over the course of the week. The dealer accumulates and sets the spread on the first day of the first part of the week. Then he will make a unidirectional swing away from those psychological support and resistance levels to trap the traders and make them make irrational decisions. Burn your margin, lift your stop, and do stupid stuff. I'm trying to figure out a way that whenever I post a chart to email the masses so you guys know that I was in the forum and you can go have a look. Some of you may or may not have seen my CHF chart, Swissy chart, where I put what the dealer was saying and what the traders were saying. If you did not see that, I invite you to go into the forum under Swissy for the answer and have a look. All right? It's the psychological battle that's going on between the traders and the dealers. I'm going to post a lot of those up. I'm going to start marking them down and show you what's going on. What I'm trying to get you to do is see the market in a different light for what it really is. Okay? Same thing applies here. The dealer shows short. Understand this is a larger time compression, so this is a couple hundred pips to the downside. The dealer breaks the psychological support level and runs down. Right? He then spikes it again. This is the same pattern I've shown you 100 times intraday, right? He runs up a couple hundred pips, breaks the psychological resistance level, forms the M, the perceived continuation, shifts the zone in 4 hours, one big drop, and ends the week back in consolidation. That, my friends, over the course of the week is this shit that I've been drawing for you since you met me. So now, let's think about this for a minute. And I'm going to make some slides for this, but it's occurred to me a couple days ago. I've been thinking about it, is that everyone knows the lot sizes on a platform. You have micro, mini, and standard, right? Let me write it down. Micro, mini, and standard. Those are the three lot sizes on a platform. Now, think about this for a minute. There are three variations of my pattern. Micro, mini, and standard. What do I mean? Micro view of price action is the little patterns intraday that Kim K calls the pushes. That's the micro view of price action. The mini view of price action would be the entire day collectively. Stop hunt low rise, stop hunt high drop. End the day back in consolidation. This pattern right here would be the mini view. When you switch to the standard view, you're looking at the course of the week, which is the same pattern over 5 or 5.5 days or 6 days, whatever you say that the Forex market trades. So the micro view, the pushes intraday, the mini view, the intraday structure and pattern, the standard view, the entire course of the week. In order for you to be successful at the method, let's try starting at the standard view, which is this big view right here, and then drill down to the mini view intraday looking for the stop hunt, and then the micro view understanding the pushes. Start with a big picture and scale it down, crank down your microscope to the micro view. Now I'm going to add this to my teaching. I think it's helpful. Maybe not. I don't know. The biggest problem is understanding where the peaks are, the high of the week, low of the week, and trading away from those areas. And that's, I talk about legendary. That's what Sunny does, and made her successful. So I want you to understand, the first 8 hours is the accumulation phase of that particular day, Sunday. Right? Let me clean this up. You guys remember tonight is like the breakout session, right? After I'm done, I'll take a break. And Zen's going to come on, Cars are going to come on, and then tomorrow night we have another 3-4 hours of training, right? We got Ray, Kim, and Jim tomorrow. I had to get a sip of Diet Coke. Okay, so listen. When you mark these charts up, go back and block off the first 8 hours. Take a horizontal line, run it across here. Take a horizontal line, run it across here. The first 8 hours, I know it's crooked. The first 8 hours. Now, what are you looking for? The dealer exploits the psychological accumulation phase of the market by cutting the support level. When he cuts the support level, there's some hunk of traders, not hunky traders, a group of traders that are jacked up and take short positions. Look at the CHF chart that I marked up if you haven't seen it. The dealer shows you something Sunday and Monday to make you think that you got to get short. Excuse me. When you get short, and I'm talking about old retail traders, not us, we know better. He comes back to the level and spikes it. He hits the stops of the people that got it right long in here. Right? Think for a minute. If people got short here and some people got long here, what's the next move for the dealer? In order to take those people out, he's got to come back and hit the stops. Hence M or W. That's where the M and W comes in. And if I know if the dealer goes back there and spikes the level and closes back above, that is a high probability trade. That's why I always tell you second leg M or W. And if you understand what I'm saying, if it really resonates and clicks with you, you will understand, stop taking shit and start taking second leg M or W. And all this aggravation that I'm causing myself will disappear. And if the light bulb just went off, congratulations. This is what I want you to understand. This is why M and W, because the dealer makes a fake move. A lot of you go, oh, I saw a little accumulation, Steve, and I took it back long. Then what happens? You get stopped out over here and you curse me out. In 5 different languages. I think 20 different languages. You guys are from all over the place. Then the dealer comes back and spikes the level, hits your stops, and you fell for exactly the shit that he was trying to accomplish. If you wait for the second leg, most of the time, with the exception of the third leg, which doesn't happen that often, you are going to make money. Here, you took this here short, and then what happens? The dealer comes back towards the high, forms out the M pattern, and then corrects big. This is where you should be in, here or here. You understand what I'm saying? Okay? All right. Let me open up the question panel for a couple minutes, a couple seconds. All right, open, close. No, I'm kidding. All right. This is helpful to someone like me who only has a few hours in the Asian session. Yes, Bruce, absolutely. Take a look at the big chart. Look. When you're looking at the 4-hour chart, this is what I want you to identify. Here you go. Block off the first 8 hours. HOW, high of the week. How? How'd they do that? Okay? Try to count your pushes. You're not always going to get them. This does not issue you a second leg. Low of the week. What are you supposed to be doing? You're supposed to be trading. After 3 days of drop, you're looking for a long signal. False move week beginning. Dealer cuts the psychological support, resistance level. Sorry, I hate those terms. I don't know how to use them right. Resistance level. You're looking for an opportunity to trade down back towards some type of target. Okay, good question, Callie. We're looking at the first 8 hours. Yes, the first 2 bars of the beginning of the week. 4 hours, 8 hours. Right here, that's it. Block off the first 8 hours. It's the psychological support and resistance level. Is it going to play out exactly like this every week? Of course not. As soon as I say it, it probably won't do it. It's the way it always works. And then you guys will be back to Steve's nuts. If I know that these railroad tracks are forming on the 4-hour, I have my directional bias for the week now, right? Stop hunt, high drop. Stop hunt, high drop. Turn into W formation looking for reversals, level 3 trades. Okay? No problem, Mike. Lewis, yes, you can use a 1 hour chart, but some people aren't getting it on the 1 hour chart, so I set up the 4 hour chart for you. If you can see this on the 1 hour chart, then you block the first 8 bars. Understand? Yes, Susan, the week can start anytime. They can move the cycle over. In fact, that reminds me of a chart that someone sent me. Let's look at it. Okay, AJ, their days were off a little bit. Okay, I have to laugh because I think it was you, Susan, that asked me about AJ last week. So here you go. What's the difference if they move the midweek reversal to Monday or Tuesday? And then they drop, stop hunt, high drop, stop hunt, high drop, W formation, end the week. Think for a minute. I've told you this 100 times. Time is our problem. It's not their problem. Okay, what does it do blocking the first 2 bars? The first 2 bars are the market maker spread for the beginning of the week, right? The first 2 bars are the psychological support and resistance level that the dealer, let me get this out of the way. All right, I got to change back to a crosshair, close that. All right, here we go. Look, here's the first 2 bars. The first 2 bars are the accumulation phase for the week. So if you understand that, look, that's your support, or resistance rather. Here's your support, right? Psychological support and resistance. What does the dealer do? He accumulates. He adds an extra 4 hours on this example. 4, 8, 12 hours, right, of accumulation. The dealer accumulates. He analyzes the contract volume. He looks at his contracts and he goes, you know what? I'm holding the opposite of what everybody sees. In this example, if the market is net long, it means the dealer is net short. Start asking yourself, what does a retail trader see? All right, you walk in here, look at this chart. What do retail traders see? Retail traders, the price has been going up. They made a pullback to the 50. They broke out above. That's a long play in a retail trader world, right? If the retail trader world is long, then the dealer is net short. In order for the dealer to get paid and stop out the long holders, he has to hit the stops and drop. What does the dealer do? The dealer comes out, he breaks the psychological resistance level of where the contracts are accumulated, the breakout traders, all the garbage that you've fallen for. He fakes long within 8 hours of railroad tracks. He drops. Dropping does what? It beats the shit out of all the people that lift their stops and think they're going to average in and get out. He keeps running it down for Sunday, Monday, and Tuesday. 2 or 3 days, people are exhausted. They haven't left their terminal. They lift their stop. Their account's in trouble. He gets their money, man. It's a couple of days. That's why the 3-day cycle for 3 levels. Just imagine yourself, the worst trade you've ever taken where you lifted your stop. I know you've done it. You wouldn't be here. I've done it. I'm not going to sit here and act like, if I sounded arrogant, I'm sorry. That's not my intent. I've done it. My wife has done it. You know better, but you just get tired of losing. You get tired of getting beat up, right? So you lift your stop, and you watch it run 2.5, 3 days, and what do? You watch your equity dwindle, and you sit there and you refuse to get up. Right? And the joke I always say is you kick your dog, slap your wife, you won't leave your terminal. Price keeps running away from you and you think it's never going to stop. You cut the trade and then you come back the next day, the dealer has formed the low of the week and it reverses. How many people do you think were in your exact shoes? Too many to count and too much money to count. That's why the dealer does it. You have to start understanding that when the dealer does this, it's an induction or inducement to get people to go the wrong way. Inducing the people to go the wrong way. When they do, they bite, they lift their stops, they do all the mistakes that are common in the business. You didn't invent lifting your stop. You're not the first guy to lift your stop. You're not going to be the last guy to lift your stop. Just understand that. Okay, he comes back for the second pass. That gets the continuation Fibonacci extension traders. And then in 8 hours, he pulls away from this level and jams everybody up and ends the week with traps. Trader's stuck. Okay? It's the same thing over and over. Psychological support and resistance. The dealer fakes it low. Exact opposite. He runs price up, forms the midweek reversal, stop hunt, high drop, stop hunt, high drop, spike to the low, end the week in the range. Look what happened. Net change for the week, 0. Okay, all that price action, several hundred pips down, several hundred pips up, and the dealer ends on Friday where he started on Sunday, back in the same range. So if you thought you were a position trader for the week, if you're like, oh, I'm in this now, I'm a position trader, Steve. Then what happens? You're either stopped out with a small gain because the dealer closed exactly where he started. That's why you're looking for 3 days of 3 levels. Okay? He ends the week back at the same price where he started. Very little profit seen on swing trades. Well, very little. None. How about that? None. Okay. Everybody good? I'm looking at the questions. Second leg of the W, third level, in the last example. Yes. But we look for the M's and W's on the 15-minute. Absolutely. I'm not telling you to trade the 4-hour chart. I'm telling you that to start understanding the course of the week. When you start looking at this shit on the 4-hour chart, you're going to be like, it's the same thing over and over again. This is all they got. Remember what I tell you, what does the dealer have? Stop hunt high, stop hunt low, trade in the range. That's it. It's all he's got. Yes, the target for swing trading has not changed. It's 3 times ADR over 3 days. The gap is not really shown on a 4-hour chart because it's absorbed inside that candle. Thanks, John. It's making some sense. Glad to hear that. Okay, all right. Good stuff. Let's move on to the next thing. Weekly cycle compares to what, Alex? I don't understand the question. The lights are on. Sounds good. Yes, this is what you're trying to do, man. You're trying to understand the dealer's behavior. When he forms the low of the week, you have a directional bias for the next couple days. 2.5 to 3 days. Day 1, day 2, hold the level in day 3. This is day 3. Now, if you took a swing trade here, you're looking for the door in this consolidation zone. 2.5 to 3 days of rise. ADR times 3. I write terrible, but ADR times 3. If ADR times 3 is met, or not met, but the 3-day time window is, and you get an outside structure high, you better take your money. Okay? And go the other way. Trade both ways. If I told you that there's a low of the week and a high of the week and the dealer trades off of those numbers and back and forth, what are you afraid of? Just sticking with the trend. You're a trend trader. Remember, I told you last week, I bestowed upon you trend trading. The only difference is you're trend trading with the dealer. You're trading the dealer trend, not the retail trader trend. Okay, Greg, it makes sense and says that you always pick the one that doesn't move. All right, here's the remedy for that, my friend. If you're a one-lot trader, just for an example, break it into 3 pieces, trade 0.3s in 3 pairs. I'll cover this in here, but I'm going to just say it now, and I'll cover it in some of the teachings. Take a couple of pairs based off of the dollar, and take a couple of non-dollar pairs. GBP, CHF, EJ, GJ. Although I really don't want you trading GJ yet. All right? Spread the wealth around. Because if you pick a pair that's in disparity, if you pick the franc to go short and the franc chops, that means that the dealer's working GBP, CHF, Euro, CHF, he's working the crosses, right? If he's working the crosses, you may not get some movement out of the major that you picked. Okay, I'm going to address the work time ribbons. Hang in there. Okay, yes, Joe. All right. I'm hoping you're starting to see this. Okay, flashcards. A lot of you posted them up there. They look good. All right, one or two more questions. Tommy, let me read this real quick.